What is up, YouTube, and welcome back to another video on high altitude investing. Today, we are talking about Bitcoin in the short term, as well as a couple altcoins and what I'm seeing in the price action on these cryptos. Before we get started though, if you're not a subscriber to my channel, go ahead and hit that subscribe button. I genuinely appreciate every single person that subscribes to this channel and tunes in for this content. So without further ado, let's get straight into the Bitcoin analysis. So let's take a look at the big picture on Bitcoin real quick before we go into the smaller time frames and what I'm looking at on the Bitcoin charts. So you guys, Bitcoin in the big picture is still following our same Elliott Wave count that we've been looking at for quite some time. So we can draw one wave, a two wave, a three wave, a four wave, which stops perfectly on top of wave one, especially when you're doing your Elliott Wave counts on the market cap, which is the true valuation of Bitcoin. And we can then expect a fifth wave to come out of this Elliott Wave cycle. Now, with this being said, you guys, the fifth wave in cryptocurrencies have historically been extended. So that means that it's actually larger than wave three. So this means that we've got a big picture, very bullish Elliott Wave count on Bitcoin. So let's take a look at the short term to see what's going on in the short term and do some analysis there. So looking at Bitcoin on the short term, there are a few very important levels that I'm personally watching. Starting off with our previous all-time high way up here, you can see that Bitcoin, this is a zone. Obviously, we did reach pretty much 69,000, but I went ahead and put this line as 65,000 since that also coincides with this peak as well. So that's our previous all-time high on Bitcoin. That's the max valuation of Bitcoin. Now, the all-time high before this one was basically where price is at right now, you guys. If we take a circle and we circle around where price is at right now at about 20,000, we can go back on our chart and we can look and see that last time Bitcoin saw a huge pump back in 2017, it stopped at around 20,000, which is exactly where prices are at right now on Bitcoin. Now, the next two important levels that I'm looking at are these two median levels. This level, because of how much support and resistance has been shown historically in this area at basically 47,000 per coin. And this level right here at 30,000 per coin, where Bitcoin also historically has tested many times in this area. So these are areas of liquidity. Basically, markets have memory. So wherever there's been a lot of orders in the past, there's a lot of orders right now. Whether it's buy orders, people waiting to buy when it breaks above, or whether it's sell orders, people buying down here and planning to take profits in these liquidity zones. These areas where the market has shown a lot of historical movement, a lot of support and resistance, a lot of reactions to that area is a place of liquidity. So that's where there's a lot of orders, there's a lot of liquidity, a lot of volume and order book activity going on in those areas. Now, you guys, with Bitcoin down here at 20,000, 20,000 is an area of major liquidity. That's also why when we look on the total market cap, it's a perfect support and resistance flip. You can see that the four wave does not retrace below wave one here on the total market cap. And that's because the total market cap is the true valuation of Bitcoin. It includes the supply times the price. So it's showing the total amount of money inside of Bitcoin, inside of the blockchain. It would be like looking at the market cap of a stock. That's the total amount of money that's been invested in that company. So because the supply changes, the market cap chart is a lot more accurate of a resemblance of the true value of Bitcoin. The Bitcoin chart in and of itself varies slightly because the supply changes, so its true value is affected by its supply. Basically, there's miners, right? They're mining Bitcoin all the time so we can send money to our friends, so we can use this amazing technology, this blessing in our lives, which is cryptocurrency, and the supply changes because of that, right? So that affects the way the chart looks. So when you look at the market cap, you can see here BTC. This is Bitcoin market cap. So that's the market cap valuation, $369 billion, where the value in price is 20,000. So anyways, this area at 360 billion in market cap and also $20,000 in price is an area of major liquidity. This is a massive support zone. So what we want to see here, and on the short time frames, like there's going to be volatility, right? Like last week we were going up and the last few days we've been going down, right? There's always this bounce up and down in the short term. You can see that short term is highly volatile. But if we're just focusing on these more major support levels, we're still zoomed in here on the daily. You know that I use the weekly, the monthly. I'm zoomed out way further than a lot of people do their charting because that's how Wall Street, that's how professionals do it all around the world. It's not to say they don't day trade some, but the majority of their big time frame analysis is going to be like monthly, large time frames where they can clearly see the liquidity zones, and not just miniature liquidity zones, massive liquidity zones. So technically, this is still kind of the short term for me on the daily candlesticks, right? But when you're zoomed way in, you can see there's a lot of volatility. You can see there's a ton of volatility. One day it's up 8%, the next day it's down 8%. But in the big picture, you can map out the important liquidity zones, which is exactly what I've done. So this major support level, what we want to see happen, we want to see prices move up towards the next liquidity zone. We also do not want to see prices fall below about 18,000 because that would show us going down to that next liquidity zone at 14,000 here on Bitcoin. So watch for Bitcoin to hold between 20,000 and 18,000 and head up towards the next major liquidity zone, which is 30,000. And then, of course, our next major liquidity zone would be about 47,000. If Bitcoin does this, we will start to see a big picture inverse head and shoulders pattern forming. It's very, very likely that we'd start to get like a huge head and shoulders reversal out of this being a left shoulder here, a head down here, and a right shoulder up here. So we need to see, before we jump the gun on this pattern, we're starting to see the left side of the pattern, the symmetry on the left side of the pattern, right? This left side of the chart, we can already see a left shoulder, a head coming down. Before we jump the gun, we need to see these next liquidity zones tested and support to hold. If these things can happen, 46,000 can easily be tested on Bitcoin. Then we can come back down and re-scoop this liquidity pocket, which I haven't labeled, but it's about 36,000 per Bitcoin right here in this right shoulder, and then head up to the same levels that we were at back in 2021. So this is the type of thing that can happen in markets while nobody's looking. Well, there's a lot of FUD, especially in technology as important as Bitcoin, or for example, like internet stocks, right? A lot of companies, if you study the way that these internet companies grew from the internet bubble out, like from 2003 out until today, there can be massive corrections along the way. I mean, even the internet bubble crash, right? But when it's an important enough technology, these recoveries happen, especially when nobody thinks they're going to, or at least the public doesn't. Because big money and big investors are looking at Bitcoin and they are invested in Bitcoin right now. So you guys, we have the type of market structure that can easily take us up to these liquidity levels. Watch for 20,000 and 18,000 zone down here to hold. And we should get a huge reversal up out of this. So let's look at the Elliott wave count one more time here for you guys that are not aware of the Elliott waves here. And actually, let's go ahead and bring those back. We can count the Elliott waves with our liquidity zones here. So down here, we start off in 2018 at our absolute bottom, and we're counting our Elliott waves out. We have a 1 wave, a 2 wave, then we get an impulsive 3 wave, you can see right here. A 4 wave comes in the market, and we get our 5th wave. Now, what's interesting is you can see prices went back up above, right? So instead of this being a standard ABC correction, this whole point from the 5th wave out is corrective structure. So it's still a correction, but it's an expanded flat ABC. And that's why wave B went above the 5th wave here and caused a lot of people to FOMO buy up here before another crash came. So this is the Elliott wave structure on Bitcoin. We see 5 waves up, we see A, B, C expanded flat, and we're testing that major liquidity zone at 20,000. So that means, you guys, we're ready for a new Elliott wave sequence. And we could be starting to see the beginning of that. This down here can be 1, 2, and so long as 18,000 and 20,000 hold, as we've been discussing, we can get another 3, 4, and 5. And by the way, these are all subwaves. This would all be, these waves that I just drew right here would actually be a smaller set of waves inside of an even bigger set. So this would be the beginning of a big picture reversal here on Bitcoin. And it could look a lot like this, you guys. So let me just show you one more chart here on my trading view. Let's go ahead and go to my trading view profile. If you don't follow me on trading view, Dallin_Anderson. And I want to show you how these markets can look like this. I have this drawn up on Bitcoin and the Dow Jones. So the bottom is the Dow Jones. This was the Great Depression. This is how the market started to recover from about 1930 out to the 1970s. Now in the 70s, there was this massive corrective structure. And a lot of people would have thought that the stock market was dead in about 74. Any people that's older that watch my channel, you would probably know this. But in 1974, there was a large crash in the stock market. And it would have given the illusion that a big bear market was coming, right? That really would have looked like the beginning of a huge crash. We had a crash in the Great Depression. Then we had this big recovery, right? So it's time for another depression, is what people would have expected. But it was just a crash. It was not another depression. And you can see that prices not only broke out of that depression or that crash and didn't do a depression, but saw more upside and continued to develop its uptrend. And we're still in an uptrend today in the Dow Jones. Now we've seen more correction since then. We've had 2008, we had the COVID panic, right? But it's been in an uptrend since the 70s, since 74. Now Bitcoin is the same way. We have the same type of thing. The 2017 crash was a very similar human psychology. We're talking 90, 80% declines in altcoins. The Dow Jones during the Depression fell that same percentage. Same type of psychology. Then Bitcoin starts to recover up out of it, and everybody's expecting another depression, another massive crash like that, right? Where we get another depression in Bitcoin, it drops another 80%. From 20,000 down to like 3 or 10. People are expecting these huge crashes. But what I actually expect to have happen is the same thing that happened to the Dow Jones. We actually see continuation of the market cycle. So that's what we're seeing from an Elliott wave perspective. We're seeing it from a liquidity perspective. We're seeing it from our Elliott wave counts in the small time frames, the big time frames. We're seeing it with our Fibonacci relationships, and we're also seeing it with our trading patterns. We do absolutely have the same type of broadening wedge pattern that occurred on the Dow Jones in that same period. And so this trading pattern can easily lead to a break upwards because it once it hits the bottom of the triangle, it has a tendency to move up towards the top of the next point in that triangle. So you guys, I'm super bullish on Bitcoin in the short term and the big picture. Let's go ahead and look at one or two altcoins here to give you guys a little perspective on what I see in these markets as well. Thank you so much for tuning in as long as you have in today's video. I genuinely appreciate every single person that tunes into these videos. Okay, so let's look at Chili's. Chili's just saw a big picture breakout of its downtrend. It's been in a downtrend since we're talking March of 2021. This has been downtrending. Now, it has broken out of that downtrend pattern and is coming back down and testing major support. So actually, Chili's is in a bullish continuation setup. We've started to see the first Elliott Wave sequence. You can see right here, we started to break out, have our first little Elliott Waves, and now we're really watching for this two wave to catch support and for us to see continuation, because we had a breakout of this major downtrend here on Chili's. And I could show you a lot of examples of coins that looked exactly like this, whether it was Stellar Lumens in 2017, but this is a very, very common trading pattern to have this first market cycle where things get parabolic, to have an extended triangle type correction. You can see this is a falling wedge triangle that Chili's did, and then to have a bullish breakout of that resistance. In other words, this downtrending line right here that prices have been rejecting on have no longer rejected, meaning that we broke above our downtrending resistance. So we're established in an uptrend. So we're actually watching Chili's to form higher highs and higher lows out of this. So this is just one example of an altcoin that's bullish. So there's people that are going to be, crypto's bearish and all this stuff, right? Don't listen to them. When you go and you look at these charts, there are a lot of altcoins showing big picture reversal patterns. So you guys, one other coin I want to really show you guys today. This is one of my favorite setups that I'm seeing currently in the market. So we're going to go ahead and pull up Matic. I'm sure you guys have heard of Polygon or Matic before. What an awesome project this truly is. So let's go ahead and add another chart here on the bottom. And today we're actually going to look at the S&P 500. So you guys are well aware that markets are fractal in nature. So what does that mean? That means the same patterns appear in all markets in all time frames. So you can even see double bottoms in the 5-minute, the 10-minute, the 1 hour, 1 day. You can see these same trading patterns appearing in all time frames. Now there's some time frames that work better, that there's more liquidity, more volume. The larger time frame you go, to a certain extent, if you go too big, you can't see anything. But the larger time frame you go, to a certain extent, if you get the correct resolution on your chart, if you're looking at it correctly, you're going to see these trading patterns in multiple different time frames, and they're going to be effective ways of predicting the markets. And it doesn't matter if it's stocks or crypto, you're going to see these same types of patterns. Okay, so let's look at the Dow or the S&P 500 on the bottom and Matic here on the top. Now, is there similarities between these charts? Ask yourself, can you see a similarity between these charts? Because I sure can. You remember how we just counted an expanded flat on Bitcoin? That special type of correction that happened where the B wave went up above? That's exactly what happened on the S&P 500 back here. You can see that we have an A wave coming down. The B wave goes up slightly above the previous peak here, and then the C wave comes back down below the A wave. So this is an expanded flat. It's a correction. All of this is corrective structure. This whole thing is a correction on the S&P 500. And the same thing is true for Matic. We have this breakout, the beginning of a new market cycle. And so we have to have some type of first sell-off, some type of correction to shake out investors. That's exactly what Matic does, is an expanded flat correction. Now you can see that both of these patterns are mirroring each other, and this point in Matic is the same as this point in the S&P 500. So this is, again, just like how we looked at Chili's a few seconds ago and saw that Chili's is doing a bullish reversal and we're actually expecting higher highs and higher lows, we're seeing the same thing here on Matic, a big picture reversal, actually an opportunity to invest in this before it really goes crazy over the next, who knows exactly how long. But I'm just going to say that the crypto markets are not done putting money in your bank, and your crypto wallets are not done growing, you guys. So there's a lot of exciting stuff to come, you guys, whether it's Matic, Chili's, Bitcoin. We have so much exciting things in the markets going on right now. So keep the faith, keep focusing on your investing, keep learning. If you're interested in this stuff, you can go ahead and reach out to me via email. I would love to help you get started in the markets. Also, if you're interested in VIP content, the 1-year program is extremely affordable. It is only $799. That's 20% off. Normally, it costs $999, but if you send me an email today, I'd love to get you set up in 1 year of VIP for only $799. You guys, the VIP, the reason why I made it is to help share my analysis with you guys so you can start making money right away in the markets without having to have a lot of knowledge. And then you can start learning from my learning videos as well, which, there's over 50 plus learning videos I give to you guys, and you can apply those in the market. So you can start making money, and then you can start learning how to find setups yourself. So the community really is created so we can all have fun and make money in these markets. Thank you guys so much for tuning in to today's video. I love you. I appreciate you. Hit the subscribe button, share it with your friends, and I look forward to seeing you in future videos. As always, stay profitable out there.